Everyone leaves during a bear market, but honestly, that's when true generational wealth is made. I'm talking 100 to 1000x gains from the lows of a bear market to new all-time highs. But you have to pick the right projects that will recover and recover strong. That's why I'm gonna switch things up a little bit. Instead of just sharing 3 altcoins, I'm gonna share 3 niches that I'll be targeting during the bear market. And of course, I'll give you specific projects to check out. Alright, my first category is exchange coins, because like it or not, one of the top use cases of crypto is speculation. And who benefits more from that than exchanges? They are cash cows and they generate ridiculous amounts of revenue. Some of them even have programs where they buy back their token and burn it. That's why I think exchange coins will most likely outperform other niches coming out of a bear market. My top picks in this category are BNB, FTT, and CRO. All 3 are from well-known exchanges with a great track record. They're safe bets in my mind. But I also like a lesser known one called Woo Network with ticker symbol WOO. They are younger, but they already have impressive growth and offer a great user experience. So I think their upside is massive, but they do have to play their cards right and execute, or else they won't be able to reach their full potential. As for category number 2, that would be scaling projects, specifically layer 2 projects that help Ethereum scale. Why do I like those? Well, in 2021, we saw alternative layer 1 networks really take off, like Solana, Terra, Avalanche, etc. And a big reason why is because people were fed up with Ethereum's congestion and high fees. Well, layer 2 networks are Ethereum's answer to the scaling issues. Because you can send your transactions on the layer 2 network super fast and cheap, and then those are periodically settled back on Ethereum. These layer 2 projects are much newer too. Most of them launched in the second half of 2021, and some of them don't even have their own token yet. That's why I think 2022 could be their turn to shine. As for specific projects, I like IMX, Metis, Matic, and any rollup that launches their own coin. Immutable X, I had my eye on before, but they launched with a super high valuation, so I didn't touch them back then. But if they drop a lot during a bear market, then that would be a juicy one to scoop up. Metis is an optimistic rollup that is super young, but has a lot of upside in my opinion, especially since Vitalik's mom is a leader of that project. I'm not even joking with you. And Polygon is the most mature scaling solution out there for Ethereum, and I'm super bullish on all the rollup solutions they are building/acquiring. Finally, ZK Sync is a ZK rollup that doesn't quite have its own token yet. But as soon as it does, I'm gonna ape in so hard I don't even care about the macro condition at that time. Finally, my category number 3 would be DeFi. What can I say? DeFi is one of the most intuitive use cases in all of crypto. We're letting people do all the things they used to, but without a bank or a brokerage sitting in the middle. And this isn't just hypotheticals either. DeFi has attracted billions of dollars worth of capital into its protocol so far. That's why I'm looking out for great opportunities in this niche as the bear market progresses. But you gotta be careful here, because many DeFi projects will go to the graveyard as well. It's only a subset of them that I like, and I look for 5 characteristics in particular. First, they need to generate consistent revenue. The more the better. Second, the more foundational they are, the better. This means other projects build on top of them or integrate with them often. Third, their leadership team has got to stay hungry and constantly improve their product. I don't like the ones that just chill these days and rest on their previous achievements. Fourth, their token should have direct value accrual mechanisms and not just be some vague governance token with voting rights. Fifth, their tokenomics should not be too Ponzi-like in order for it to sustain itself. Like Ohm, for example. Too much Ponzi-nomics going on there for my taste. So with all those criterias in mind, some projects I target are Alchemix Finance, Curve, and DopeX. Alchemix is super innovative with their self-repaying loans. Curve is one of the biggest DeFi protocols out there, and they offer efficient trading for similar type assets like stablecoins. And DopeX is one of the top platforms for decentralized options. These 3 projects, and other ones like them, I have confidence that they will recover quickly when the bull market returns. So in terms of categories I like, we got exchange coins, scaling projects, and DeFi as well. But there's also the flip side, aka 3 categories I would not touch with a 10-foot pole. especially during a legit bear market. Alright, the first category I'm avoiding would be the Metaverse or blockchain games. I just think these are too hyped and too early for now. Many of them are worth billions with a crappy game or no game at all. And I think this niche is particularly hard to succeed in because you need both a genuinely fun game and properly designed tokenomics in order to succeed. So that's a much higher barrier to cross for these projects compared to projects in other niches. Like Axie Infinity, for example, they have amazing tokenomics, but their game is just okay. I'm pretty sure the vast majority of players wouldn't be there if it wasn't for the earning money aspect of it. Now, I do believe in this niche long term, but for this bear market, I don't see any of these projects as worth it. As for my second category that I would not touch, that would be NFTs. Now, you may call me a hater or say that I'm not gonna make it, but my points here are actually quite nuanced. First, I don't like NFTs because they are too illiquid. At least with altcoins, we can sell them whenever because there's usually enough liquidity for them. But with NFTs, if you're holding like a single JPEG and no one is bidding, then the floor could fall out under you before you're able to catch a bid. Second, I just feel like NFTs are the ICO bubble all over again. Specifically, I'm worried that certain types of NFTs will be labeled securities by the SEC and shut down. Not the pure art or collectible ones, of course, but the ones with long-term roadmaps and teams that promise you future growth with them. That's getting awfully close to security as defined by the Howey test. And many analysts and lawyers on Twitter have said the same thing. So if this take turns out to be right, I think the NFT market will get destroyed, and that's why I'm staying away during this bear market. Last but not least, my third category is meme coins. This one is pretty self-explanatory, but when Elon is not tweeting and the memes are not flowing, these projects really fall to the graveyard. Just look at the charts for Doge and Sheeb. Pretty self-explanatory, and they fell much harder than the other projects with actual utility and adoption. Not to mention the thousands of other deflationary meme coins, most of which are going to zero and will never recover. I mean, some of them may come back and rocket once again, but given the risk and reward, I think our capital is better allocated elsewhere during a bear market. But here's the thing, even if my analysis is right about which categories are the best, and even if we choose the right projects, we could still get wrecked if we don't have a good strategy and sound discipline. Like, I can't stress enough that we should not deploy our capital too quickly during a bear market. Many times people ape in and run out of dry powder, all while their alts drop 90% and then 90% more on top of that. That's happened many times in previous bear cycles. Just go look at some charts of altcoins in 2018 if you don't believe me. Some people were like, dang, this project is down 90% already from its all-time high. Time to scoop some up. And then it falls another 90% from those levels. They got wrecked, and they didn't even have any dry powder left to use at the lowest point. Now, I'm not saying it'll play out exactly the same way this time, but it's my strong opinion that it's better to deploy slowly and conservatively instead of aping in when you see some decent prices. This whole video I've been talking as if we're about to start a long bear market, but you might be wondering, is that even the case though? Or is this just a temporary correction during an ongoing bull market? Well, if you want to hear the case for a continued bull market, then watch this video where I explain that thesis. But either way, I want to say RIP to the stock to flow model. I called it here in this video, and plan B was so wrong. Give that a watch, I'll see you soon, and cheers.